Hey guys, what's up? Alec back with the daily stock market. And wow, guys, another killer day today. I know a lot of you guys are making money on AMC, up to $25 per share, up 35%. So we'll talk about AMC a little bit. I want to do a cryptocurrency recap also, but the main part of this video is going to be 5 dividend stocks to have on your watch list and 5 dividend stocks that I consider investing into and am investing into as well right now. All right, guys, so let's talk about AMC first. Wow, guys, it's amazing. Just the sheer volume that's going through this stock might be unprecedented. And if you pay attention to volume, here you'll actually see 700 million in the volume. So let me know, comment below if you've ever seen volume higher than that. That's an absurd amount of volume at 700 million. Wow, guys. So it's pushing, it's pumping right now. Pump, 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 pump. Volume 700 million and average volume's 180 million. As we see that volume taper off and go down to 500 million, 400 million, 300 million, 200 million, which will happen, that's when we're going to start to see the dump of AMC. These things don't just go up forever, keep in mind. Anything else that this has happened to in the past, look at it's always came back down. GameStop, Doge. So if you're trying to time this, volume's a good way to see if the volume keeps ticking up. Check tomorrow and see if it's higher than 700 million. It might be an indicator that it might push a little bit higher, right? But if we see the volume start tapering off, 400 million, 500 million tomorrow, then that's a good chance and a good indicator that the dump is coming. Also, I posted this on my close friends too. So if you guys want to see some of that stuff, I'll give you a little bit of a peek into my close friends. It says, if you want to know what I personally think, it's going to crash back down to 11 per share. There's a lot of hype right now pumping it up, and it's going to dump here in the next few days, I think, or into next week. So if you got profits, my advice is to lock them in and get out. Look at today's volume, 500 million. Is that even possible? And then we kind of already talked about that classic pump and dump scenario. And then I followed it up because I had a lot of people asking about put options on AMC, which your head might be going to right now. So if you are considering put option, this is my advice. I'm getting a lot of questions about put options. That's very risky. You don't want to bet against a Reddit or meme stock because they're very powerful with the community and very hard to time. In my opinion, it will fall, but it's hard to say when. Put options could be a good idea, but maybe wait until next week until we see some more of that downward momentum. Also consider the high risk of hype stocks not dying off as quick as a traditional stock would. You know, AMC is not like a traditional stock, so it might not die down as quick, or it can die down a lot quicker, right? It's not a traditional stock, so there's that unknown variable when you are talking about AMC. Also, remember to pay attention to the volume. As soon as we see that volume disappearing and cut in half, that's a good indicator downward momentum is coming. So we already went over that also. We're also doing a contest in the close friends list. So if you want to screenshot this little picture here or just pause it and read it, you can get some information on that. Now let's do a cryptocurrency update, and then we'll talk about dividend stocks after that. So first up, we have Litecoin, and you can actually see that Robinhood is having a scheduled maintenance around 2:45 p.m. So first up, we have Litecoin up 3%, 4% on the day, and at one point it was even up 8%. On the week, they are down 5%, and they went as low as $131 a coin at one point when we were kind of telling you guys to buy at that rate. $130, $140 a coin is a steal for Litecoin. I think that this is a great time to buy under $200 if you're a long-term investor, but really you want to buy under $175, especially if you're a swing trader, because then you can easily swing trade it up to $250 a share and make some good percentage gains there too. So under $200 per coin is a great place to get into Litecoin, but under 170 or closer to 150 is the sweet spot for short-term traders. Now, this one, in my opinion, will be at $250 to $300 again in the next 3 to 6 months. So definitely watch out for that. Now, moving over to Ethereum is at $2,700 a coin. And we even saw them as high as $2,700 a coin. Or excuse me, $2,800 a coin. Now on the week, they were as low as $1,800 a coin when we were saying to buy pretty heavily on May 23rd. We got in at a great rate, and now we're up almost $400. So if you need help buying cryptocurrency also, I'm going to start a training course with cryptocurrency videos teaching you everything I know about buying the dip and what stock and what coins to look for. Cryptocurrency also, ETC we could see coming back up, down 5%. We're up $150 on ETC, 37%. And then that goes to Dogecoin, which we're up over 91%, $700 on Dogecoin. And we've obviously made a lot more than that on Dogecoin. Already took a lot of profits, a lot of profits, made thousands and thousands on Dogecoin. They ran up to 70 cents, remember? And I think that Dogecoin can get as high as 50 or 60 cents again, although you're going to want to be holding this one for 6 to 12 months. Now let's talk about Bitcoin, because this is the almighty one that everyone cares about. It's holding strong at that $3,800 resistance. We want to see it higher than 40,000, right? So if it can get above that 40,000 into 41,000, 42,000, that's going to be some good momentum, positive momentum for Bitcoin and all cryptocurrency in general. And hopefully we'll see Bitcoin going back to 50,000 at that point. You'll see altcoins start to rally. You'll see some of the smaller coins start to rally. Dogecoin will rally. ADA will rally. Litecoin will rally. So we really need to see that positive momentum behind Bitcoin. Now, I want to talk to you guys a little bit about dividend stocks. So now dividend stocks, the first thing you can do is you can scroll down. And when you get as low to the stats, you'll actually see dividend yield right here is 0.65. So that's how you find a dividend stock. But that's not the first thing you're supposed to be looking at. That's just a bonus. Remember, think of dividend investing kind of like a bonus. Yeah, the dividend is only 0.65 on Apple, which is very low. But the good thing is it's going to be growing 20, 30% per year. So if you go after a dividend stock that has a high dividend, like 8%, for example, or 9%, I don't usually do that, because typically what you find with those stocks is they lose 2 or 3% every single year. So your net gain, your total, you lose 2%, but you gain 8% dividend. That's 6% gain over the year, where something like Apple only pays a 0.6 dividend, but they can gain 20% over the year. So that'd be 20.6. So Apple's the first one on the list. They're going to be a great one to own because you're going to get paid those dividends. But really, remember, dividends is more of a bonus. The secret to dividend investing is don't invest into a dividend stock just because of their dividend. Think of that as a bonus. Think of stocks you want to invest in, like Apple, for example. And then if they add on, if they have a dividend attached to that, that is a bonus. But the further this list progresses, the higher dividends you will start seeing. All right, so the next one up on the list is QCOM, and this is a great 5G stock. So even if this one didn't have a dividend, I would still own it. Now, this one has a dividend of 1.9, so it's getting a little bit higher in the territory. You can kind of see I own 8 shares already. We're down 5%, but that's okay because I want to expand my position a little bit more. And like I said, this is a great 5G stock that you're going to want to own for long term. If you put this on your list, try to get in under $100 a share. That's what I'm really waiting for it to happen, is to drop. Now, this is a great stock, so it might not drop. It could possibly keep going back up. And dividend stocks, keep in mind, are stocks that you want to dollar cost average into long term. If you're not a long-term investor, you shouldn't even be thinking about dividend investing anyway. So if you're a long-term investor and plan on holding for 1, 2, 3 years, dollar cost averaging into dividend investing is a great way to go, and not just focusing on dividend and not just focusing, oh, this one pays me an 8% dividend, it's the best stock ever. No, you want great companies that are going to perform for you over the next 1 to 2 years that give you a bonus dividend, maybe between 2 and 5 or 6 at the max percent. So between 2 and 5% is a sweet spot for dividend investing. Now, after that, we have one of my favorite dividend stocks on the list. And yes, I did say one of my favorite dividend stocks, and it's down 2.2%. So it might be a good time to start a position and dollar cost average into them over the long term. Okay. Now, this one does go as low as 125. This is also a safer stock. It's not going to go through huge price fluctuations while you're owning them. So if you can get in at 115, it's probably won't go lower than that. As you can see, the price does not fluctuate that much at all. In the last year, the price fluctuated from 115 to like 135. So you're not going to be risking your portfolio like a growth stock, for example, or if you put in like $10,000, that $10,000 can be cut down to like $4,000, for example. P&G is a safe stock. And look at that dividend yield, a sweet 2.3% dividend yield. PE ratio is only 25, right? So you can see this one growing around 10% per year, probably expect from P&G. So it's not like a crazy growth stock, but it's a safer one, like a money park. For example, this is one I dollar cost average into my Roth IRA because it pays that nice dividend on top of that percentage. So it's basically, think of it as like a savings account. It's better than if you have $10,000 in a savings account paying you 0% dividend yield or, no interest at all. At least this P&G is going to pay you a 2.3% dividend yield every single year. And you're also going to get the gains that's associated with owning the stock on top of that also. But remember, I would prefer to own this one between $115 to $125 a share to buy in at that point. After that, we have a very popular dividend stock that is known as one of the top dividend stocks. It's down 1%, 1.4 on the week, up 2%. Now, you guys might know Johnson & Johnson because of the whole vaccine and everything going on recently with that, but they've been a very popular stock to own for retail investors for the last 5 years in the stock market. I remember hearing about them when I recently got introduced to the stock market in 2016. Right? So that's how you know they're an OG investor company. And even if you held them for the last 5 years, you would be up 50%. Plus, you get that dividend of 2.3. So that's a great dividend, remember, to look for. Just because it's not a 6-8% dividend, remember, those stocks you really don't want to own because watch, if you go to those stocks that are an 8% dividend or 10%, 15% dividend, if you click the 5-year chart, you're not going to typically see a 50% gain over the last 5 years, right? So you want to see growth in the company's stock price along with a nice dividend attached to it. And Johnson & Johnson's going to present that for you. And they also give you that PG, Procter & Gamble standpoint where it's like a safe money park, better than a savings account where you can put your money into Johnson & Johnson or Procter & Gamble or Apple, and it's going to be safe there. It's not going to be undercut. You're not going to lose a bunch of money on the stock, especially if you plan to hold this one for the next 3 to 5 years. Now, this is a great stock to own, but I would prefer to buy them under $150. They're at an all-time high. They're at a 52-week high basically right now, at an all-time high. So I typically never buy stocks. The 52-week low is 133. So personally, I would be waiting for about 150 to $130 a share is going to be great for long term. Again, if you're a short-term investor, don't invest into dividend stocks. It's not for you. Now, the last one we're going to talk about is Verizon, and this is one that Warren Buffett recently invested in a lot, so it definitely piqued my interest at that point. Now, the good thing about this stock is it does not move that much. So in the last 3 months, you see it moved 0.32%, and it's at its peak, it was only up 6% in the last 3 months. So again, your money is pretty safe in a stock like Verizon. It's not going to move much. In the last year, it's only moved 3%, and the biggest peaks and lows was like a 10 to 12%. So your money's pretty safe in something like a Verizon. You don't have to worry about your money evaporating. Now, the good thing about Verizon is you also have a 4.4% dividend yield. So it's the highest dividend yield on this list. And the PE ratio is only 12, which is the lowest PE ratio on this list, right? So if you can buy this stock closer to the 52-week low, look at that, how tight that 52-week low and that 52-week high is. $61 and $52. So when you see a tight 52-week high and 52-week low like that, you know your money is in a safer place, and you can almost treat these stocks like a savings account. You know that money is not in a risky place, and it's not going to disappear either. So I would prefer to buy in at this one around 52. Under $50 a share would be a steal, and I think that can be a possibility. And if you have $10,000 that you're looking to put into some stocks and you want some safe stocks, this might be the list for you, these 5 different stocks, because they're not going to fluctuate that much. They give you a nice dividend. And I think these 5 stocks altogether are stocks that I would personally own, even if they had a 0% dividend. Remember, the dividend is just a bonus. And also on top of having a $10,000, these are safer stocks compared to some of the other stocks we talk about. If you put $10,000 into some of the other stocks we talk about, there's a very, I'm not going to say a very high possibility, but there is definitely always a possibility that $10,000, especially if you're a beginner and you get emotional, can go to $4,000, because if it loses 50%, you might get emotional and just pull out at the wrong time, and then the next week or the week after, it goes up after that. But if you're a beginner, you don't know how the stock market works, you might pull out at a low. So these kind of stocks, these dividend stocks, are kind of a hedge against growth stocks. They're more stable, secure kind of way to invest, where you don't have to worry about you losing sleep on your investment. You know that your investments aren't going to move that much on stocks like this, and it gives you a comfortability at night knowing that hey, I'm not going to get rich with the stock market, but I'm looking to get around 10 to 15% gains per year in a very safe manner. The wrong way to dividend invest is just look at the dividend only and say, oh, this is a 10% dividend, I'm investing in this stock, even though you don't know anything about it, and you would never invest in that stock if it did not have a nice dividend. So I hope you guys enjoyed that video. Smack a thumbs up on this video and share with a friend if you did. I'm up $750 on the day. We're killing it this week, up $2,800 on the week, and the last 3 months, up 20% in the last 3 months. We're at an all-time high on our account, $42,000. If you want more investing videos, dividend investing videos, let me know. If you want more cryptocurrency updates, let me know, and I'll make another video for you guys. And if you want more one-on-one help and you don't know when to buy the dip or what stocks to buy, I have a training program that's made and developed for beginner traders. So it doesn't really matter how much money you have to start with or your experience level. This program teaches you everything right the first time through. So the first time you go through, you are learning everything the correct way. And if you want to see what people are saying about the program, click success number 3 on my highlights on my profile on Instagram and read through some of these referrals and testimonials. These ones you won't see, these green ones here that says the close friends list, because those are for close friends people only, and you'll only be able to see them if you're on my private list. But then you'll also see success number 2. You can read through this, and there's over 250 positive testimonials of people making money. Recently, we've seen a lot of success. So if you go to success number 3 and you go into some of the more recent ones here, like this one was 2 days ago, you're right, it does pay for itself. The program, I'm up 13% across all my accounts. This person made $2,000 in 1 day. Just today, he said, I love the program. And then you can kind of read through these on your own time. Hi, Alec. Thank you for hosting your program. All my profiles look great. Up $1,100 also. And you can actually see the charge point. There's only a $500 call option. He made 71% on charge point. This guy made 21% on DraftKings, and it was only a $338 call option. So you don't have to have loads of money. This guy here, he only has, $255 in a Tattooed Chef and $214 in a Beyond Meat, and he's up 26% on Beyond Meat, 27% on Tattooed Chef too. So feel free to read through these. This guy only has $1,500. Austin Moore only has $1,500. He's up $300 on the day, 23%. He said, "Are you a wizard, bro?" Question mark, question mark. So that made me laugh a little bit too. So if you want to join, feel free to DM me on Instagram. I'm taking a few more people. I'm here to help you guys out, and I will see you in the next video. Remember, don't time the market, buy the market. Peace.